Investing for beginners in 2024 can be exciting and rewarding, but it's important to start with a solid foundation. Here's a step-by-step guide to help you get started. Set clear financial goals. Short-term goals. Do you need money in 1 to 3 years? Focus on safer options like savings accounts or CDS. Long-term goals, retirement or buying a house. These are ideal for stock market investments, real estate, or mutual funds. Build an emergency fund. Before investing, ensure you have 3 to 6 months of living expenses in an emergency fund. Keep this in a high-yield savings account for quick access. Understand different investment types. Stocks, buying shares of companies, offering growth potential but higher risk. Bonds, loans to governments or corporations, generally safer but with lower returns. Mutual funds and ETFs, pooling money with other investors into a diversified portfolio. Real estate, investing in property, which can provide rental income and price appreciation. Cryptocurrency, digital assets like Bitcoin and Ethereum, highly volatile but gaining popularity. Robo-advisors, automated platforms that manage your portfolio based on risk tolerance. Choose the right account. Brokerage account, for buying and selling stocks, ETFs, and other investments. Retirement accounts, e.g., 401k, IA tax-advantaged accounts for long-term retirement savings. Decide on your investment strategy. Passive investing, index funds or ETFs that track a market index like the S&P 500. Low fees and hands-off. Active investing, picking individual stocks and trying to beat the market. Requires more research and carries higher risk. Diversify your portfolio. Spread your investments across different asset classes, stocks, bonds, real estate, to reduce risk. Diversification helps balance the highs and lows of individual investments. Understand risk tolerance. Aggressive, high-risk, high-reward investments like stocks. Moderate, a mix of stocks and bonds for balanced risk. Conservative, low-risk investments like bonds or CDS, focusing on preserving capital. Start with low-cost investment platforms. Popular platforms, Vanguard, Fidelity, Charles Schwab, and apps like Robinhood or M1 Finance offer easy access with low fees. Compare fees, minimums, and ease of use before selecting a broker. Consider dollar cost averaging. Invest a fixed amount regularly, regardless of market conditions. This method helps smooth out the effects of market volatility over time. Reinvest dividends. Many stocks and funds pay dividends. Reinvesting them can compound your returns and accelerate your wealth building. Monitor and adjust your portfolio. Check your portfolio at least once a year. Adjust allocations as your financial situation, goals, or risk tolerance change. Keep learning. Follow market news and trends. Read books like The Little Book of Common Sense Investing by John C. Bogle, or A Random Walk Down Wall Street by Burton Malkiel. Stay patient. Don't panic when markets dip. Investing is a long-term game, and markets historically recover over time. Avoid emotional decisions and stick to your plan. Taxes and fees. Understand capital gains taxes on investments and look for tax-efficient strategies like using tax-advantaged accounts or holding investments long-term. Watch out for fees, as high costs can erode your returns over time. By following these steps, you'll build a solid foundation for investing in 2024. Start small, stay consistent, and focus on long-term growth.